The knowledge required to protect and grow your wealth via the ownership of assets, securities, and commodities is not something that is taught in early schooling. Unless you pursue a degree in finance, chances are that you're going to have to educate yourself when it comes to understanding the mechanics of the stock market and investing. Even if you do pursue a degree in finance, chances are that you're going to encounter heavy bias in what you are being taught. This can be due to various factors. One factor is the state intervening in the education market by the means of regulations, subsidies, interest-free loan backing, student debt forgiveness, and state-approved curriculums and agendas designed to serve individual interests. If you are reading this in 2025, you are in luck. At the moment, there is currently mountains of free and paid educational material on the internet that you can utilize to educate yourself. Content that is free from institutional bias that is pushed on you, your children, or the people you know due to a conflict of interest. Albert Einstein remarked in an address given to the State University of New York in 1936 that the role of school must be the training of independently acting and thinking individuals who, however, see in the service of the community their highest life problem. Education is what remains after one has forgotten everything he learned in school. It is a miracle that curiosity survives formal education. Albert Einstein. You are on your own when it comes to moving forward and increasing your useful knowledge base in this world. In my opinion, it would be wise to assume radical personal responsibility when it comes to your self-education in the particular fields of economics, finance, and investing. If an activity such as financing useful prosperity-increasing businesses and increasing your wealth is of importance to you, then you will find much benefit in learning as much as you can. When it comes down to it, on a per capita basis, the amount of high-quality goods available to you in a society directly correlates to a higher quality of life. It is possibly the most important indicator of a society's prosperity. The entrepreneurial spirit that it takes to create these goods and services should be embraced and supported, unhindered by the state. The great news for you is you are lucky enough to self-educate as to the process and invest in these productive businesses by buying shares of a company on a stock exchange. By participating, you are helping to fund the future growth of that company, and you could potentially be paid a dividend for your contribution. But there is always risks involved in these purchases. The risk for the investor is that the market value of your shares could go up and down relative to the open demand in the market. There is also a counterparty risk to consider. What happens if your brokerage decides not to release your funds to you? You will need to consider and compare the relative risks of holding your currency in a physical form, in a brokerage, or inside a traditional bank account. Options trading overview. So I've recently been trading stock options contracts inside the Interactive Brokers trading platform. Options contracts exist from market demand. They are a way to address demand from investors to protect themselves if their shares lose value. So that would be buying a put. They are also a way to achieve profits by speculating in the price increase of a particular stock. This would be buying a call. You have the potential to produce income by the means of selling insurance to stockholders, by the means of selling a put option. You can also sell the opportunity to buy a stock that you own at an agreed price by selling a call option. If you are new to options, you can look at selling puts like you are selling insurance to people who want to protect against the risk of their shares being destroyed by a metaphorical hurricane. There is a lot more to know about this process. I will explain a little further, but I will save in-depth explanations for a future video. This whole process for me has been very exciting, learning about selling and buying options. It has been financially lucrative and a great learning experience. At this point, and with some applied discipline, it looks as though I will be able to sustainably fund my international lifestyle and my pursuit of increased personal freedom, mainly through options trading and investing. It is a fantastic feeling, touch wood. One that I've been working towards for a long time. Oh, but there is risk. My trading strategy will continue to work if markets continue to exist and if they can continue to rebound after historically reliable stock market crashes. Market crashes can happen and could very well happen again in the near future, so it is a good idea to consider risk management with your stock positions. You could consider asset class diversification, hedging your stock market positions, and percentage allocation. You could also hold a form of hard money that has been money for over 5,000 years. That money is, of course, gold. Just a quick one, guys. If you are interested in buying precious metals and interested in storing it in secure vault storage, I highly recommend the services of Bullion in Singapore and strategic wealth preservation in the Cayman Islands. Depending on where you want to diversify your assets geographically, Cayman Islands is a great option in the Americas, and Singapore is a great option in Southeast Asia. Both of these companies are highly reputable companies that provide a great service, and I can recommend them to all you guys out there looking to buy precious metals and looking to vault it securely. If you're interested in buying metals from these companies, please click the affiliate links in the description below. You'll be helping my channel, you'll be helping these businesses, and you'll be helping to preserve and protect your wealth now and going into the future. Now back to the video. The strategy. The option strategy I've been implementing specifically is called the wheel strategy. A quick overview is that you sell puts, you get assigned on the stock, then you sell covered calls. It is a strategy where you can collect income by selling cash secured puts at a specific strike price. At the same time, you will be able to buy the stock at a discount if the price falls below the strike price of your contract. So you collect income and you also get to buy the stock at a lower price than it is currently in the market. Once you are assigned or put the stock, if your contract expires in the money, you will then have to buy the stock at the strike price of the contract. From here, you can start to sell covered calls to begin collecting income on the stock that you now own outright. Selling a call option gives the buyer the right, but not the obligation, to buy your shares from you at the agreed upon strike price of the contract. Once you have sold a call option, if the stock price moves higher above the strike price of your contract, you may get assigned on the call option you have sold, so you now have to sell your shares at the strike price of the contract. The strike price for the contract should ideally be higher than what you bought the stock for originally. So once you've sold your shares by someone exercising your call option that you have sold, you can now just start the whole process again by selling puts to enter a new position. The strategy is circular, hence the name the wheel strategy. There is a lot more to this strategy, but this is the general gist of it. Don't worry if it's over your head. In time, the process will become clear with practice. My investment strategy has changed from the time I wrote the newsletter that this video is based on, but at the time of writing this letter, 95% of my trading at this time was selling puts to collect income. If you're planning to buy a stock, selling puts to give you the opportunity to buy a stock at a discount and also collect income at the same time is a win-win situation. The only problem is if the stock kind of crashes and goes well below your strike price. You are collecting premium when selling the put, and you also gain the opportunity to buy the stock at a discount. Say if the stock you want to buy does crash a lot and you get assigned on your put and you're down on your stock. I mean, yeah, that can happen. But the thing is that can happen in a normal market anyway. So it's you either time the market to buy the stock after there's a crash and you buy it cheap, or you kind of just dollar cost average in and buy the stock. But when you sell puts, you are collecting income as well as getting the stock at a discount. When applying this strategy, you may miss out on potential gains from price increases in the stock. If you were to buy the shares outright, you might be able to make more money initially, say if you're bullish on the stock and you are certain it's going higher in the near term. Although if you're bullish on the company moving into the future, selling puts is a very safe way to generate income and acquire the stock at a price that you are happy with. In the long run, your return should be higher than just buying the stock directly and holding it. Opportunity to increase personal freedom. If you are looking to increase personal freedom in your life and live an international lifestyle, options trading is definitely one viable way to do it. I personally plan to combine options trading, dividend investing, stock speculation, precious metals ownership, and my one-person creator business to provide income and grow my wealth into the future. Much the same as with investing, I see it as wise to diversify income streams by working towards having multiple income streams. There is a fairly steep learning curve to understanding the process of options trading. Although, like anything, it can be learned with some dedication, hard work, and genuine curiosity. I personally worked through a paid options course along with my own research and study. If you are looking for some free resources to get started, I suggest checking out the Invest with Henry YouTube channel. His channel has tons of free educational content and courses. You know, he has like 1 to 3 hour courses up there for free, and they all are really good and have really good information. You may have different ideas from him in terms of stock selection, but he will teach you a lot about the process of options trading and learning that whole process. He also has a paid course available, a Discord community, and there is weekly group coaching calls that I find very helpful. If you are looking for a platform for investing and trading in general, I recommend Interactive Brokers. Interactive brokers, you can trade options. I have level 4 options clearance. To my knowledge, they have access to the most international markets out of any trading platform. Keep in mind that you will need level 3 options trading permission to sell puts on interactive brokers. Brokerage platforms have certain minimum requirements that need to be met before they grant you trading permissions. You may have to do a knowledge test specific to options, and you'll get asked multiple questions about assets, income, and financial liquidity. You can use my referral link in the description if you would like to sign up to interactive brokers and also support this channel. So I hope this has been a good introduction to options trading for you and how you can incorporate it into your overall investing strategy. I believe options trading is something that everyone that owns stocks should know how to do. You can sell calls on stocks that you already own. You sell covered calls to generate income. You sell puts to enter a position. Depending on market circumstances, it could be a really good strategy for you, and it is something worth learning in my opinion. Thank you for watching, everyone. Thank you for giving your time, and I hope you got some value from this video. Check out my newsletter, Total System Freedom, on Substack, and I'll see you in the next video. Peace.